Americans suffering sharply higher levels of financial anxiety. Money is now the prime cause of stress for most Americans, according to a May 8th survey by Bankrate. At least 52% of respondents reported that personal finances have had a negative impact on their mental health, a significant increase from 42% a year ago. Fears over high inflation, rising interest rates, and a pending recession have filtered down into the everyday lives of millions of Americans still recovering from the disruptions caused by the pandemic lockdowns. There are several sobering statistics in this report, with inflation at the center of many of these money worries. Despite a strong job market, wage growth has not kept pace with the rising cost of living. Debt has been rising and savings have been dwindling. About 82% said that feelings of stress, anxiety, worrisome thoughts, loss of sleep, depression, etc. have been caused by economic factors. The greatest cause of concern was inflation at 68%, followed by rising interest rates at 31%, and unstable finances or job security at 29%. Inflation remains the greatest source of financial anxiety since last year, with analysts expecting a long-term negative impact on Americans' consumers well after it reaches its peak, said Bankrate. Meanwhile, respondents who said that their money fears have worsened over the past year was at 57%, while 47% admitted that paying for everyday expenses was the greater concern. At the time, 41% of those surveyed claimed they lacked enough emergency savings. Almost all those who said the money occasionally impacted their mental health told surveyors that at least one of those three concerns had worsened over the past year. Now we start to see, by covering the Federal Reserve's actions, central banks around the world, we cover what they do, you see the monetary policy they put in place, and now we're seeing it trickle down into the everyday person's life. These politicians, these bankers, every decision they make affects everyone in the entire country and all over the world. People are feeling inflation. You get less, the size of the packages you buy are less, you get less food, you're paying more, your job's not giving out raises, you might lose your job, everyone's in a bind, everyone's feeling it. This is the feeling and effect of bad policy. And it started with compassion. It started with helping people out during the pandemic. A lot of the printing that happened in 2008 stayed localized within the banking sector. So the things that banks typically buy rose with inflation, like stocks, like real estate, all the things, the assets that were going up are things bankers buy. But when we gave out money, although it was in the name of helping, that money was not localized in the banking sector. It went out to the general economy.